Talking about Carnival, Mr. Steven? Aren't you short Carnival? Talking about. Sorry about that. Hey, Pat. I'm born to be. Yes, sir. Carnival. Falling apart. What's your closing strategy? If you don't mind if I ask. Look at that. That's the COVID lows. We're pretty much right at $8. Yes, sir. Hi, Larry. Carnival. Falling apart. So, yeah, so wow, look at that. So right at $8 was our COVID low. If you don't mind if I ask. Twice, actually. March, and then a little bit of a rebound, and then again in April. When it sinks. COVID lows, we're pretty much right at $8. Yes, sir. Hi, Larry. All right, well, these guys, I believe they reported their earnings. I think. So let's see. All right, so the market is pretty much not doing much, just sitting right on this 380 level. But let's just see what happens with Carnival here. Carnival. Oh, so guess what I've been doing for the last half an hour? Looking for my damn karate pants. I'll tell you, it's so annoying living with two teenage daughters because it's like all our laundry gets mixed up. One second, guys. I'll be back in a teeny second. I just want to shut something off over here. Yeah, so anyway, I put them on my dresser, and I have my lesson this afternoon, and yeah, just gone, just disappeared in the middle of thin air. And of course, I ask them each, like, oh, no, we don't have them. But they're probably mixed up in their laundry, and I am not going to go through their laundry because that would be like, I would need to take karate lessons after I do that. All right, so let's see. Carnival is down. Today is Wednesday, so yesterday, Citigroup maintains neutral, lowers price target. So I guess they reported on Monday, so maybe it's kind of a delayed thing. Oh, look at that, an underweight rating, down to $7 price target for Morgan Stanley. Okay. Why Royal Caribbean is getting hammered. So I guess all of these, they all kind of trade together anyway. Let's see, Royal Caribbean, RCL. Alrighty. So this one is still pretty well above its COVID lows. And what about this last one here? Why Norwegian Cruise Lines? NCLH, right? NCLH. These guys are pretty well above their COVID lows too. Carnival said because Clifford's sleeping on him. I don't know, man. So freaking frustrating. It's like it's a half an hour I can never get back with my life where I just spent looking around for karate pins. Now I got to go class with the shorts on, and I'm sure when we're sparring, I'll get a couple extra whacks in my head because of it. Fuel price, consumption. Hi, Jenny. Well, let's go. You know what? Let's go take a look at their earnings and see if we can deduce what in there is so bad. So it's probably margins are compressing, because I mean, well, it's either that or it's this is forecasting the coming recession. Let's see, investors shareholder information. Oh wait, we want news and events. So it's pretty easy to come to these company websites, and if you type in IR and then the symbol, generally it will bring you to the investor relations page. And this, all right, this is not it. I think this is like, yeah, this is like some travel agency site. All right, let me do that again. All right, so CCL IR Investor Relations. Oh, well, I guess it is a site. Annual reports. All right, this is starting to get on my nerves here now. Why is this so hard to find? Investor Relations, Carnival Corp. Well, these guys aren't exactly very friendly for their. All right, so here we go, Carnival. So yeah, this looks more like it here. So let's see, let's go down to the bottom. Let's see if we can find investor relations. And it brings us right back to this page. And we want to look at their earnings, which were 2 days ago. This is really bizarre. Why can I not find them? Right, Carnival's are the dynamics behind Carnival's Q2 earnings rally. All right, well, maybe I just read something wrong. But regardless, I guess it's pretty bad. Carnival said they have all their ships booked at 110%. So you would think that would be up. My sensei believes in pain. Uh, yeah, sensei can he can take care of himself. Let's just put it that way. He's about 60. And I was like, Sensei, have you ever had to use your martial arts skills in real life? And he's like, only once, Putrino Samba. I'm not very proud of it. And I'm like, well, what happened? And he said when he was like 25, he was in Tokyo and these 5 guys jumped him. And I said, what happened? And he's like, well, I walked away and they didn't. And that's all he would say about it. Hello, Baghdaddy. Joe D, what's up? Bad guidance, 70% off. All right, so let's see. So today, what were we talking about in our morning class? Talking about how we can look through the various parts of the market to get insight into what is going on. So we're going to see if we can find stuff that'll give us insight into where we're going to move next. Now, we're sitting right on this 380 level here. So this is the S&P 500, or this is actually Spider. So we look at the Spider. I mean, it follows the S&P 500. This is an ETF, and this is what people trade. So this is what we tend to look at. So we have here this resistance level, and it's become support. So we can see right here 2 really important dynamics in the markets. And if you're a trader, you really need to know this stuff because this is what trading is. So notice how this level that was support over here, 390, converted into resistance over here, right? This happens because of buyer's remorse. There's people here who bought. And when we went higher, they thought that they were doing pretty good and they were happy. But assuming they hold on to it, we fall below. And now the people that bought here who are still holding are losing money. So a lot of them tell themselves, hey, I made a mistake. If I want to sell this thing, if I can get out of it at break even, I'm going to. So they placed their sell orders at the same level they had their buy orders. So that's why a level that is support can turn into resistance. So when you're trading and you see something rallying and you're starting to think like, where might this rally end? Well, if it's getting close to a level that had been support in the past, there's a chance that that becomes resistance. Now here we have the opposite dynamic. This is resistance becoming support. This is because of seller's remorse. It's the opposite. People sell, goes lower. They thought they made it a good call. But then when it goes higher, a lot of the people that sold say, you know what, I shouldn't have sold. I want to buy it back. But I don't want to pay more than I sold it for. So they put their buy orders at the same level that was resistance. So in this case, if there's enough of these orders like there was here, at least for now, I mean, it was support yesterday, resistance turns into support. So if you want to be a short-term trader, you really need to know where these levels are. And I think this is really good for options traders too, because when you get these things that get overbought or oversold and get to these important levels, that's where you get moves. I mean, if there's no news, there's probably not going to be much movement on the stock unless it's some kind of a longer-term dynamic. So one of the ways that I like to trade, or when I used to trade, is looking for things that are set up from long-term dynamics for short-term trades, right? In other words, if you can find something, a lot of people ask me, well, Mark, I'm a day trader. How far back in the chart should I look? And the answer is, I guess, as far back as it takes, because I bring up this CVS example a lot. So I'm going to just go over to this. Because say you are a day trader and for some reason you like CVS. Well, if you kind of just came into it here with just looking at this one day, you're kind of trading in with tunnel vision, I guess would be the right word. But had you known that, oh, gee, this particular level here, 90, is important for this stock. It's actually probably closer to 89. All right, so 89 is important for this stock. It was resistance here. It was support here. And here we go, right? We're going lower. We get oversold. We're at support, and we bounce. So if you were a day trader, you would probably look at this, and maybe you wouldn't do anything on this day. But on this day, you would say, you know what? This thing is oversold, and it's getting ready to bounce. Or if you're an option trader, or a day trader, when you look at these longer term dynamics for short term moves. So does that make a sense? Do you get? Hey guys, 1 second. I gotta go. I just gotta go do something upstairs. I'll be right back. All right, sorry about that. Just had to go. Let's see. Anyone trade Canadian stocks here? We do have some Canadians students in our class. All right. So anyway, So we want to look for these longer term dynamics for shorter term trade ideas. So we're going to go back to the S&P, and that's typically where we start looking. And again, we're right on this 380 level. So now the question is, what can we see that would possibly tell us that we're going to break down and go lower? So first thing we're going to do is look at the technology sector, which is our biggest sector. And this looks pretty weak, right? It looks to me like we could get a little bit more downside here. I don't really see anything in here that looks like it's really clear or significant. So we could keep falling here. So tech looks pretty weak. So, it's probably a decent chance that SPY takes out that 380 level today. Here we have our healthcare sector. And, it's reversing, just kind of holding in there. This is the second biggest sector in the market. But we can see here how we have these really clear examples of how some levels are more important than others, right? For whatever reason, 125 is important for this, and 119 is important for this ETF here. And it doesn't matter what financial market it is, as long as it's liquid enough, you're going to have certain price levels that are more important than others. So I'm looking at a little bit of a longer term perspective. If you look at it for a shorter term perspective, like say you're a day trader or something like that, this is just 5 days. So actually, let's just go to the 1-day chart. So this is just today. So, and each one of these candles is a minute. So we can still see the same type of things that give us that we see in, this is the fractal nature of this, right? This could be a year-long chart, or it could be a 1-day chart, which is what it is. And we could still see the same principles coming through in this fractal nature. So notice how we have support right around 128.10. So, if you're day trading and this gets down to 128.10, or if you're an options trader, and this is an ETF, so there's probably stocks within the sector that look like they might bounce more. So we can do that and we'll go into the sector. But if this thing gets down to around 128.10 and it's oversold, there's a chance it stages some kind of a rally. So now let's go over into our healthcare sector and look at particular stocks to see if we can see something that looks like it's more vulnerable or more ready to bounce. So we look at these sector ETFs. XLV is healthcare. There's 11 sectors in the S&P 500, and we go through them to try to find trading ideas and get insight into which way the market's going to go. So now we're going to look at some short-term stuff here. It's looking to me like the sector is getting to a point where it may bounce. So let's look at particular stocks in the sector. United Health, UNH, is one. All right, so I don't know. It's if XLV gets down to that level, this will get down to here. And I don't know if it'll rebound by a bigger percentage. Johnson & Johnson. Ooh, now look at this. If healthcare, all right, so look at this. So we're really oversold. All right. We got our RSI indicator down here at the bottom, which measures how much we've moved in 14 minutes. All right. So this thing is really getting, is really moving down pretty big here, and it's extremely oversold. So if XLV gets down to here and starts to move higher, then there's a good chance Johnson & Johnson is going to snap back even more because it's more oversold. So this could pretty easily, in my opinion, go from, I'm not saying it's going to be like a huge move, but we're just looking at a really short-term time frame here. But this could easily bounce by $1 or so. And if you're a day trader or if you're an options trader, that's a pretty big move. Can I review a basket of stocks with high PEs for a put trade? Let's see. Yeah, whoops. So you know what? Let me look at a couple more of these healthcare stocks, Raj, and then I'll take a look at that. So that's Johnson and Johnson, Pfizer. Let's see if we can find something there. Nah, I don't know about this one. Just looking for stuff that really looks like it sticks out. I mean, if it looks like the sector is going to bounce, there's got to be stocks within the sector that are going to bounce more because the sector is really just the aggregate or the average of all the stocks that are in it. Lilly. What do we got going on here? Looks like we could be breaking a longer term uptrend. Actually, maybe not. Let me go back to 1 day. Merck. Let's see, MRK. All right, so this one, Merck is really oversold as well. So if the healthcare bounces, we could be looking at this one too. Let's see, it was right down the line here. Thermo. Abbott Labs. Nah. BMY. This one's really oversold too. Well, on a day time frame. So, if if healthcare bounces, these things are all going to turn with it. So this is a way where we can get trading ideas. And for those of you who are a little bit more sophisticated, you can look at the different options and the betas of these stocks to kind of figure out which one is going to move the most if they do in fact move. So the key is to wait for the rebound. And what do we got here? Donahar is the last one. DHR. Yeah. So, all right. So we've seen those. All right. So that's our healthcare sector. I'm going to go back to 1 year here. All right. So healthcare might bounce. This is communication services. It's kind of still hanging above support here. So if healthcare, looks like it's going to go down, and this looks like it's going to break down, then the market's going to go lower. By looking at these sectors, we can kind of get some early insight, which I guess is really the whole idea, right? It's what we want to do is get stuff early. This is our industrial sector. And let's take a look at natural gas. Yeah, so, all right. It's a little trending higher there. All right, so let's see. Can I review a basket of stocks with high PEs? So Dollar Tree, Equinix. Let's see. DLR. Actually, that's not Dollar Tree, right? Digital Realty Trust. All right, so what is the PE here? So the price to earnings is, all right, the price to earnings is 28. So now what we would want to do, and this is a little tricky because they sell this information. But if we looked at the sector, XLRE, they're not going to show the PE ratio. So let's go over here. Digital Realty Trust. And let's see what they have for their pairs over here. This is a lot of what this is what fundamental analysts do in a lot of ways. They basically look at a company and then they look at its peers. All right. So this is the Digital Realty Trust. And this, for whatever reason, these are all the companies that they are considered to be competitors or in the same industry. So now we're going to go look at the price to earnings ratios and see what kind of the average is. So AMT is high, 43. Crown Castle is 50. Weyerhaeuser is lower, but Weyerhaeuser is different now because Weyerhaeuser, I think, is like a paper company, right? And so sometimes it's questionable as to, like, who decides where these things go. But I would say a good way to start would be just to take an average of these, and that would tell you what the average PE is. And we could look at our dividends over here too. But this would be like a screening process that a fundamental manager would look at. They would look at, oh, well, gee, the average PE in the industry is 30 and these guys are trading at 11. Does that mean they're cheaper than these other guys? But people, it's debatable over, are these guys really peers, because they do stuff really different. Like American Tower has towers, right? Cell towers, and Weyerhaeuser has paper, so it's like a big difference. But this is what a lot of, for people that are interested in fundamental analysis, a lot of it is comparing things to their peers and seeing how they stack up against their peers. Like, really simply, if there's 10 companies in an industry and 9 of them have price to earnings ratios of 20 and one has a price to earnings ratio of 10, the one that has the PE of 10 is going to be considered cheaper. So that's the stock that fundamental managers would consider buying, because they would think, once the market recognizes the value here and once this catches up, then this will have a PE ratio of 20, which means the stock will have doubled. So price to earnings ratio is a term you hear a lot. And really what it means is the amount that you are paying for a dollar of earnings. So if a company earns $1 a share and it's trading at $10, it has a PE ratio of 10. If a company is trading at $30 a share and it earns $1 a share, it has a PE ratio of 30. So the cheaper, the lower the PE ratio, generally, the cheaper it is to buy those earnings. So that's the way we look at that. When we look here, price to earnings ratio, where it says TTM, this means trailing 12 months. So these are actual numbers that have been reported. Where it says PE forward, these are based on estimates. So, it's questionable about whether we'll get to these, whether these estimates are correct, but this is going backwards. So that's the way that a fundamental analyst would look at things, right? As traders, we tend to look for things like, is it overbought or if it's sold? Well, fundamental analysts look at it a different way. Is it overvalued or is it undervalued? They generally have a more longer term time frame. And the problem with that is that, you could buy a stock and you got to wait 5 years to find out whether you're right or not. As trading, or especially like a day trader, at the end of the day, when high frequency trading first came around, some of these firms were literally making so much money that they would stop trading because they didn't want to draw any attention. And the advantage that they had, and I'm talking about the first people into the space right now, high frequency funds, a lot of them are losing money. But they would be able to tweak things literally like, after an hour, we've gone an hour and this has changed. Let's tweak this a little bit. Let's tweak that a little bit. So really good book about all that stuff. If you guys are interested, it's called Dark Pools by Scott Peterson, right? It's in my opinion, it's way better than that whole Flash Boy thing. Flash Boys, I thought was kind of stupid, frankly, because it's Wall Street, right? It's Wall Street. Like, people are out to make money. Just because these guys get an edge, people are jealous because they were printing stimmies and bands hand over fist. So the high frequency funds weren't really what should have been questioned. What should have been questioned was the exchanges, because the exchanges, and they probably still do this, the exchanges treat their clients differently, right? So a lot of what high frequency was they trade so often that a lot of these exchanges want their business. So there's this thing called maker taker. So the exchange would say, hey, if you come, when you want to buy something, you can do one of two things. You can either bid for it and wait for someone to come to you, or you can go take an offer and go to a seller and take what they're selling. So these exchanges are fighting for liquidity. The more stocks that they have trade on their exchanges, the more money they make. So what they do is they give rebates or money. This is part of the whole payment of order flow thing that you might hear that's been getting discussed. They say, hey, if you post a trade on our exchange, if you create liquidity, if you make liquidity, if you're a maker, well, we're going to give you a little bit of a rebate. And we're talking about like, maybe 1/100th of a cent, but, tens of thousands of trades. So they can go if they want to buy something, they can go post a bid on exchange and get their rebate or whatever you call it. Or they can go to another exchange and take liquidity out of the exchange, in which case they would have to pay a fee. So therein lies what people should have been talking about, was why are these exchanges treating people differently? And now some of these high frequency funds, their returns would actually be bad, but because they make so much money off of maker taker, their returns are good. So, all right. So anyway, going back to American Tower here, I don't know. I mean, it looks like it's in a downtrend. Not really doesn't really look like a screaming short to me. Equinox. I mean, I would probably would short this. I would wait for it to break down. I mean, that doesn't look like a short to me. Or if it gets up to here, that's where I would be looking for resistance. You're wondering if IWM is oversold at the moment. Let's see. IWM is the Russell 2000. Small care stocks. So the answer as to whether it's oversold or not would depend on your time frame. Wait, you're looking at, what is that? The SPY divided by IWM. So that's like a little relative chart there. Is IWM versus oversold versus SPY? Well, IWM usually it's probably more volatile. I would say the SPY is probably more oversold right now than the Russell 2000, and that's because a lot of the selling is in these big stocks. Apple's actually up, but check the movement of the 11. Yeah, I know those guys at Sector Spider. Well, I mean, I used to. We're live on YouTube. I didn't know that. Thank you, TK. All we need is Clifford to start barking. Yeah, he'll be out there pretty soon. All right. I really trying to understand if the news can be good or bad. But the price of oil is going down. Most of the time when something is moving, it's not because of the news. I mean, I guess it could be. My guess is this is probably more of a little bit of profit taking just after this big move here. Most of the short-term trading here is going to be traders. It's not going to be people that are longer term that actually need to take delivery of oil. like for instance, if you're maybe Carnival Cruise Lines, I don't know if they would use oil, right? Or they maybe diesel. I don't really know what they would run one of those ships on. But that's what this is here, right? When Ukraine broke out, these are people just ripping it higher because these are people that like, oh, if we don't get the oil that we had promised us in 6 months, we're not going to be able to, we're going to go out of business. Like, say you're an airliner and it's like, oh, we think oil is going to 200. We better go and buy it now and buy it, capture our price in the futures market. But I would think this is just a little bit of profit taking. But 95% of the time, the media is wrong when they talk about why the market is moving. Have I seen insider dumps all month long on Salesforce? Let's take a look at this. All right, let me put this over here where you guys can see it. Well, what this probably is I wouldn't take this as a bearish signal per se, although these guys are selling. But when you see something like this where the chairman and the CEO is selling over an extended period of time, this could be something like, the guy wants to retire and he announces he's going to sell 5 million shares over the course of the next year, and we're going to do a trade every day. So notice how it's like pretty much every day he's exercising options and he's selling it. So I wouldn't take that as negative news. However, it is a little interesting that some of these other people are selling as well. But this could just be some option related thing. But when you see that, where you have all that, like, the same guy selling it on like pretty much every day, that is generally just someone who's, thinking of retiring. Guy's got to raise money for something, pay off his bookie. So that I wouldn't really take that as a bearish signal. And it looks like those other guys probably just had some options that came up. I do not understand your point about Flash Boys. Was there not a point that made their edge on the level of insider trading? No, Flash Boys, and I never read it, but the way I remember it is that basically Flash Boys came out and said, oh, high frequency guys are bad. Period. And they're not. I mean, they just got an edge. High frequency traders, the first people that became the high frequency traders had an edge because no one was doing it like the way they were. So at first, when they start out, they're doing well, but then it brings competition in, and then the returns aren't as good. But my point is in the book Flash Boys, they were being critical of the high frequency traders, right? But high frequency traders, they just got an edge. They were ahead of the game. They were, they got in there early. And, say you have a hedge fund where one of the strategies is high frequency trading. Well, who do hedge funds manage money for? Pension plans and endowments. Who are pension plans and endowments? The little guy. So what I was saying is that I think it was like deifying, or I don't know if deifying is making something sound good. It was like, it was implying that they were doing something wrong. And in my opinion, they weren't. It was the exchanges that were doing things wrong because the exchanges were treating clients differently. So that was my take on that. And there's different kinds of high frequency trading. I mean, high frequency trading is what backs ETFs. I mean, if you didn't have high frequency trading, you couldn't have, you wouldn't be able to have ETFs. So that's where I think that, in my opinion, that book was like a little bit wrong. When I first started out, everyone would always blame the specialist. Oh, the specialists. The specialists were the guys down on the floor of the New York Stock Exchange that were in the booths that were basically market makers, in a sense that each specialist was responsible for trading certain stocks. But, it was like, oh, the specialist. Now it's like, oh, the algos and it's the algos, it's the dark pools. Well, 10 years ago, it was like, oh, it's the high frequency guys. I'm thinking junior miners might be worth watching for. Oh yeah, okay. I didn't know there was a junior miners. So if you like gold, instead of buying gold itself, if gold goes the right way, which is not today, these mining stock ETFs will move more. Cruise ships run on diesel. Um, I think Seth that tech is looking pretty weak. Well, I don't really know if they were front running. I don't know if they were front running orders. I think they were just out there trying to take advantage of really small, um, small dislocations in price. So, but yeah, I mean, going back to that whole thing, I remember thinking, I mean, it's not something I want to spend too much time on, but I just thought that, it's like people were talking about, uh, I think there's a part of it is jealousy. I mean, I'm jealous of how much money they make. Like, I think that's why people kind of demonize these, like hedge fund guys and, they're like, conspiring against the little guy. And, that's the Cipriano out there. I saw the video, Cipriano, if you're out there. And I would like to address that with you if you're there. It's quite interesting, um, but they do make a good point. Like Maxine Water, I can't believe these words are actually going to come out of my mouth. But Maxine Waters actually made a good point. Um, that Citadel trades 40% of retail volume. So Citadel has all this data on like, oh, this is what the retail traders are doing. But here's the thing: that stuff is probably all disclosed. It's not like it's a secret, you know. Um, well, I kind of got lost when he started talking about the Rothschilds and the hatred of Steve Cohen. I mean, look, man, Steve Cohen may not even remember who I am, right? But I remember him very well, and I drove the dude to the dentist a few times, right? I had some interesting talks with him, and he's just not there's just not these villainous, it's like the guys from like the Thomas Nast. This guy was an author back in the 18 or a cartoonist back in like the 1860s, and he really went after all the robber barons. But the robber barons were actually, you know, like the railroad guys, right? Like they actually, if workers went on strike, they would bring in strike busters, and there was a lot of violence, people getting killed. Um, but anyway, so I just think that it's like kind of like this, right? Let's see, like this. Boss Tweed. I mean, this dude was like really like a genius, actually. It's like a whole story talking about what's going on in here. So he was really against Boss Tweed. Boss Tweed was the head of Tammany Hall in New York City, and he was basically someone who everyone loved when he was making a lot of money. But then let's see what happened. I think the guy that was the bookkeeper got into a sleigh riding accident and got killed. So they had to bring in a new bookkeeper. And he was the one who really started to expose how crooked these guys were. And it was like basically, I think the big example is that like I think they built a courthouse and it was budgeted to be like $200,000 and it ended up being like 15 million or something like that. And and then of course everything they needed, Boss Tweed would just go start a company and they would send it over to there. But anyway, so that there was a lot of corrupt political machines, and Tom Nast wrote these brilliant cartoons. But I'm just saying these guys they're not evil guys. I mean, you know, they're not. They're just really good at what they do. They're really driven. They work 24/7. I mean, like Cohen. I don't know if this still happens, but he has all these teams that would trade for him, right? You had your utilities team, you had your people that trade the auto stocks, you had your gold traders, right? And he would start on Sunday mornings, like around 10 o'clock, and get on the phone with whatever team and like what's going on this week, and would talk to every team until like 10, 11 o'clock at night. So that's how the guy spends his Sundays. So just it's the drive. And what I would say to someone who doesn't like Steve Cohen, well, hey, if you get into an accident and you end up in one of the hospitals that he funded, would you say I got to go somewhere else, or would you let them take care of you? So but I don't know about the whole Rothschilds controlling the isn't that like supposed to be like the Illuminati? um oh wait, I saw an interesting article here that wasn't out this morning, and I forget what it is now. So we like to look in the paper just to see if we could find some trade related things. Oh, look at this. The Three Arrows Fund is being liquidated. So we knew this was coming. That whenever you have a big market sell off like this, you always start hearing about these things. And a lot of times, like a big one will go down. Like we heard about that Tiger Global was having problems. So if word starts getting around, oh, Tiger Global is going under, well, then people know that it needs to be liquidated. They're going to start looking and see what stocks do these guys have big positions in. Let's go out and short them, see if we can get ahead of them. The Freemasons. Now the federal actually in the Great Depression of the 1890s, there was no Federal Reserve. So when the government was going to go bankrupt, they went to J.P. Morgan, and J.P. Morgan lent the government the gold to keep it afloat. The Federal Reserve, I don't think, was founded until after the Great Depression. But it's kind of it's the structure of our country is why it didn't get founded earlier, and that's because we have 50 states, right? So people really didn't perceive of themselves as being like, oh, I'm an American. People would say, oh, I'm a Virginian, or oh, I'm from Connecticut. So when the Civil War came around, the government passed a national income tax to fund the war. But at the time it was very controversial. So that's why we didn't get a central bank until, let's see, when was the Federal Reserve formed? Federal Reserve history, I guess. Federal Reserve. Fed history. Yeah, all right. So the Glass-Steagall Act, 1933. So this was part of FDR's thing for the New Deal. So let's see. All right. So Federal Reserve Act of 1913, actually, and then they really, then when FDR came in, they really increased it. So it was the third central banking system. So this is kind of interesting here, right? So the central bank was very controversial. People didn't want it because people didn't want to have a government that was too strong. The whole reason why they wrote the Constitution was to prevent local governments from having too much power. So Hamilton was the guy, and you're probably going to be reading about him in next week's presentation because it's the 4th of July. But Alexander Hamilton is the guy that came up with all these ideas of the funding and the first bank of the United States, and it was very controversial. So you'll notice it wasn't re-chartered. Then they got it re-chartered again, And Andrew Jackson came in, and Andrew Jackson was against central banks and fiat currency or paper currency, and he shut it down. And there was this thing called he went in a war against a guy named Nicholas Biddle, who was the head of the bank. And it's really interesting. There's just so many interesting parts of our history that have to do with money. But a lot of people say that this set our country back like 30 or 40 years, and had this second bank not been shut down, we would have gotten into the Industrial Revolution earlier. But you have to understand that the country was a collection of states, right? And states all had different money. States had different banks. Like, you could be like, all right, well, I'm going to get money from the Bank of Connecticut. If I go to Florida, will the Bank of Florida accept it? Maybe they'll accept it, but only at like a discount. So there was all this like economic chaos going on, all over the place. And that's one of the reasons why they figured, we need to get something centralized here so we can start getting control. So if you remember in our presentation, we saw that the reason why we had this big depression in the 1890s was because Grover Cleveland insisted on sticking to the gold standard. So the economy expanded, but the money supply didn't. That led to deflation. So that eventually evolved into the need for something like this Federal Reserve. So that's where that comes from. Don't get me wrong. But yeah, keep it coming. Keep it coming, Cipriano. Keep it coming, dude. I like hearing about stuff like that. But it was pretty interesting, and they do. I'll give you this. They do bring up some good points, right? But I don't think it's a secret. Like to act like, oh, it's like this. Oh, Citadel knows what retail traders are doing. Well, it's like everyone on Wall Street knows that. I don't think it's everyone on Wall Street knows that. I don't think it's any big secret. And I would imagine if you trade with Robinhood, you somewhere in the fine print it says that. And I will say this, after watching that, Robinhood didn't, in my opinion, one of the reasons why maybe they could have shut down is because they want to protect themselves from getting sued if they let people buy stocks that lose a lot of money. But it basically sounded to me like they just got overwhelmed, that their technology just couldn't handle what was going on. So, now that's a whole different story. That's a whole different story. It's like, well, I can't place a trade because you guys didn't have good enough trading systems, and I ended up losing money because of it. So are you liable, right? Would Robinhood be liable in that case? And I'm not an attorney, and I don't know. Robinhood is actually a registered broker dealer, I guess. So that's a little bit of a different thing. So there's a lot of different things going on in there. But if we look at it like this, right? Just say the only world that existed in trading was the Reddit crowd. Just say all we had was the Reddit crowd, Robinhood, and AMC, and GameStop, and it was like in a closed economy or a closed thing. Well, think about it. Some people are going to make money, but some people are going to lose a lot of money. So it's not like, oh, Robinhood shut you guys off. Every single person who was going to trade lost out on money, right? For every buyer, there's a seller. How do you interpret the GDP result? Well, it wasn't. I need to elaborate on that a little bit. When they report the GDP 3 times. The first time is the number people are looking at, down minus 1.6. But then they reevaluate it more, and then they come up with their secondary number and then their final number. So today was the final number. So I was wondering if there was going to be a little bit of a difference or a surprise in there, but I don't think there was. But I do think that I'm still bearish. I think the market's going lower. And even Powell is, you know, pandemic couldn't alter inflation. Is there a risk we go too far? Certainly. Well, my guess is that, the reason why the guy didn't say yes or no is because his attorneys probably said, don't say yes or no. Well, I mean, I don't know if everyone knows that the market is rigged, Boris. I mean, that's valuable information and people can just interpret it. But I don't think it's like it's hidden. But I guess you could kind of say, well, I guess you could say it's rigged in the sense of that they trade against the order flow. So I will give you that. Quite simply, if you are a Citadel market maker and you come in the morning and you see, oh, 99% of the retail orders that we got on XYZ are sells, and then they would go and sell ahead of that. But that would be, that would be illegal. That would be front running your order or front running orders. As a matter of fact, this firm called Knight Securities was developed in the mid 90s to as a consortium of all the different discount brokers. Like there was Waterhouse and Schwab and so forth. And that's exactly what these guys would do. But at the time, it wasn't illegal. It might have been unethical, but it wasn't illegal. But they would just come in the morning and be like, oh, we got for every one buy order in the stock, we got 30 sell orders. Let's just start selling because we don't need to execute this stuff until the market opens. But, those guys got caught and they got fined and all that stuff. Do I understand that if Citadel trades 40%, it is practically inside information? Well, it would be, but just knowing that they trade that wouldn't be inside information. Like just knowing that that's the volume wouldn't be inside information. But if the people there use it like the way I was telling you, and they see like, oh, we got this big mismatch of orders and they trade against that, then yes, that would be inside information. So they shouldn't do that. And I guess, they were doing it and they got caught and they had to pay big fines. So that would be inside information. When you have access to news that the public doesn't have, that could materially affect the price of a stock, that is inside information. So if you come in and you're a Citadel market maker and you come in and you say, oh, for every 15 sell orders I have one buy order, it looks like the stock's going down. All right, well, I'm going to go execute these orders the best I can. You get the information, but you're not acting upon it. So it's not illegal to get inside information. It's illegal to act upon it. So if the guy comes in and says, hey, I see all these sell orders, calls up his buddy who's a day trader and is like, dude, you should start shorting XYZ because we got this massive sell orders coming in. Yeah, then that's illegal. That's inside information. See, the thing is, with these places, what my experience has been, like a lot of, and I'm not saying it's right. It's wrong, frankly, that a lot of these guys, they just start making so much money that they don't care anymore. They just don't care about compliance. They're just like, whatever, man. It's like, dude, you know what? I made $10 million last year. I made your firm $30 million. I'm not going to the sexual harassment meeting today. I'm going to go play golf. All right, I will watch it again, Cipriano. But it's Wall Street, right? Things happen. So I don't doubt that shady stuff goes on. I just think that it doesn't happen as much as most people think. So that's what I would say about that. All right, so let's see what else we got going on here. The routine executives. Oh, this is what we were just talking about, right? Plug Power. Oh, we were talking about this. All right. In his biggest ever payday from selling the company's shares, Mr. Marsh netted $36 million by selling 40% of his holders under an automatic trading plan. Shortly after, he sold a string of negative company announcements that the fuel cell makers' shares plummeting. All right, so this is what we're talking about, the prearranged plan um, where you sell a little bit every day. Um, what about the GDP number? I don't know. I think it was the third the third look at it, and I don't think there was really a surprise in there. But that's what happens with these. If some executive just wants to diversify and they announce I'm going to sell 2 million shares, they might say, all right, well, we're going to sell 20,000 shares a day over the next 100 days or whatever it ends up being. I have 25 calls. Do I think you should get out? Well, I think that if SPY looks like it's starting to break 280, I would get out, but I probably wouldn't pull the trigger yet. I mean, my guess is it goes down, but as long as it's holding, But if it was me, and today we closed down 375, 377, whatever, I would get out. I don't think the information from Citadel is accessible to everyone. What about dark pool orders are not accurate? Um, Coinbase reported wrong. Well, I don't know if that was crooked or if that was just incompetence. Um, I mean, pretty much, look at it this way: every trader in the institutional trading world has access to inside information, because if you're trading for fund XYZ, you have all these big sell and buy orders that could move the market, and the public doesn't know about that. So just by the nature of it, if you're a trader, you have insider information, all the time, right? If I have an order to sell 1 million shares of a stock, and I know I'm going to knock it down $1, I mean, I could call one of my friends and be like, dude, I'm about to knock this stock down $1, go buy puts. So does stuff like that happen in the real world? Yeah, I'm sure it does, but I don't think it happens as much as people think. That's why a lot of trading desks are, you're not allowed to bring your phone out on them. They look at every one of your emails. They look at all your IMs. So generally they're a pretty tight environment. Yeah, this Coinbase is having some problems. But I mean, yeah, think of the information these guys must have. That's why I think Robinhood will probably get taken over, because that is good information that we can, is convertible into trades. That's like IBKR announces, they say every month how many accounts they've opened. Well, that could be a sentiment indicator. Thank you, Brandy. Going to the beach. Mark should not bad GDP numbers. Yeah, I think that bad GDP will be could be good for the market, but this GDP, this is the third report, right? They report it and then they verify it. And sometimes when they're verifying it and reporting it a month later, that's what we got today, the final report. So I was wondering if there was going to be something in there that was a surprise, and there doesn't appear to be. But the bottom line is we still, inflation is still high. Oil's going back up now. You know, there's really not a lot to be bullish about in the longer term, other than sentiment. All right, guys. So let me get some final questions if you got it. If not, I'm going to get going. I got to go. I don't know. Should I make another run looking for my karate pants, or just go in shorts and just get ready to get knocked around a little bit? I know where they are. They got to be in my daughter's laundry somewhere. All right, guys. Let me get going. I will be back tomorrow morning, and I don't know about that, Mr. Steven. Tomorrow we're going to talk about trading models and so forth, and then the trading school is going to be closed on Friday, and then Monday we have a holiday. Yeah, I'll go take one more look for my pants. Thank you, Domby. Thank you, Chica Blue and Barnaby. All right, I'll see you guys all tomorrow morning. Thanks, everyone.
Okay, folks, and that was that was pretty much the live class that we had with Mark Putrino today. I showed you, this is market principles, by the way. You have about 146 students there live right now for that class. And if you do want to catch the recordings, if for any reason you missed the class, just go to the header. You have everything there. Live is for the live class, video library, all of the recordings. Then you have chat for where all the live trading rooms are. Charts where you can pull up your charts, and of course keep in mind this does come with Benzinga Pro, so it is part of the trading school. And on YouTube, for you guys to know, there's a 7-day trial for $7. After the 7 days, if you want to keep it, it's $14.97. Make sure that you're using the link on this YouTube, because I did add some extra courtesy items for you guys, but you have to make sure you use the link that we have in the description here or that we put in the chat, because it's pretty much added to that checkout. So so yeah, it was a pretty good class today. Absolutely. Shout out there to Born to Be Free. Happy birthday, man. I know you had a good time there. So yeah, folks, feel free to reach out if you have questions. We'll put that contact in the chat. But just wanted to give you a quick overview there of what we're looking at here on the school, the dashboard, so that you can get a look at the actual schedule, right? What's going on Thursday, tomorrow, right? Yes. So you have investment strategy and trading systems, Friday office hours, and the schedule is Monday to Thursday, 7 to 9 a.m. Eastern, and then 12 to 1. And then on Friday, you have that one session from 7 to 9 a.m. Eastern. By the way, everybody that does join will get a free laptop. So big shout out to you guys. Thanks for being here, and we'll see you folks next time.